please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is RDBX, Redbox Entertainment. This finishes at $6.62 today. That is down 22.39%.
And it's gone.
So we talked about the stock yesterday. This was the hot stock yesterday. And once again today, this was the hot stock for the opposite reason. So this was number 2 on StockTwits. I think it had about 7,000 mentions. So once again, we're going to analyze it. So it was definitely short squeezing. I predicted yesterday. It looks like the squeeze is almost over or already over. And here we are today. So no company specific news to justify this price action today. It just seems like, once again, short squeeze coming to an end, momentum cooling off, people taking profits, and shorts coming in. So let's go ahead and analyze here. So first of all, this looks like a cup and handle in the making. Bottom of the cup being 160, the low. And it looks like this topped out at $11. And if it did top out at $11, that would be a bearish indicator, because that would mean the stock is due for a pullback to form the handle, which it looks like it's forming right now. But it can also be above $11. It can also be $12.05, $13.95, $14.75, $19.25, or the high of $27.20. Although personally, I do think this did top out at $11. So the cup and handle can be bullish or bearish depending on where the top is. But it looks like long term it's a bullish indicator, and in the short term it's a bearish indicator. We also have a bull flag in the making here. I drew it for you guys. Here's the flag pull, and now we have the flag developing. So that's a bullish indicator. That is telling us that the stock may break out to the upside. And then we have a double gap up. First gap up at 375, so that's a bearish indicator. That is telling us that the stock should come back down to 375 to fill that gap. And then we have another gap up at 620. So another bearish indicator that is telling us that the stock should come back down to 620 to fill this gap. And in the aftermarket here, this is pulling back down to 620. So that is a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off as well. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 685 and 640. So if this goes to the upside, next levels of resistance would be 710, 735, 765, 790, 820, 850, 880, 915, 945, 980, 1010, 1050, 1090, 1125, 1170, 1205, 1240, 1270, 1305, 1340, 1395, and then 1440. There is resistance above 1440, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 640, $6, 560, 520, 445, 390, 350, 315, 270, 235, $2, and then the low of 160. So right now at this current price, 662, the channels to the upside are pretty decently sized, so expect a normal amount of price action if this continues to run to the upside. However, if/when this breaks 1340 to the upside, the channel starts to open up and get really wide, so expect a significant increase in price action if/when this breaks 1340. And to the downside, the channels are pretty wide, so if this continues to run to the downside, expect a significant increase in price action. RSI is currently at 68, so no longer in overbought and overvalued territory, but still very high. So still pretty much overbought and overvalued, so be careful guys. And this did 41 million in volume today, which is above the average. So this sell-off today was confirmed by the volume, but that's a significant decrease from over 150 million in volume yesterday. So it does appear like momentum is cooling off and the squeeze is coming to an end. Okay guys, just my opinion, not financial advice. And what I'm going to say is just based on the technicals, not the fundamentals, because fundamentally, I really don't like the stock. I think it's a really bad stock actually. I don't know anyone who watches Redbox anymore. But technically, long term, it looks bullish. Big cup and handle here. However, in the short term, we are getting a lot of bearish indicators. Again, double gap up, cup and handle, and high RSI. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. Again, looks like the squeeze is over. Looks like it's crashing, and there's still a lot more downside to go. Not surprising. You know, this squeezed, and with every short squeeze, it goes down just as quick as it went up. Looks like a falling knife right now. If you were to go long here, you're most likely going to get burned. So I would say going long at its current price, 662, would be a high-risk, low-reward play. So if you want to go long, I would hold off, and personally, I would set the buy orders to 375, where the gap up is. The gap at 620 will definitely fill, and the gap at 375 is likely to fill as well. And I think 375 would be a pretty good entry. So I don't like the entry of 662. I can support going long at 375 and lower. And if it pulls back below 375, then you can just average down at the supports that I mentioned before. Now, if you want to go short now, financial advice, looks like a really good play to me. So yesterday, I said going short at 850 was a really good play. You would have made over 20% if you did. Even here at 662, this is still a really good entry on the short side. Again, I do think this will pull back down to 375 to fill the gap. And from the current price of 662, that's still about a 45% downside. So you already missed a lot of downside, but there's still a lot more to go. So I can support going short at 660 and higher, and I would look to cover at 375 where the gap is. And that should be a relatively easy 45% of the downside. I would say going short here would be a medium risk, high reward play. I say medium risk because this technically is still short squeezing, so you never know, anything can happen. But it looks really, really unlikely this goes back to the upside. So I wouldn't worry about that too much, and a lot of downside potential here, so high reward. So it looks like a really easy short play. Should be able to make a lot of money here going short. Alright, so pretty straightforward, guys. This was definitely short squeezing. Went up a lot, from like $1.50 all the way to $11. But it does appear like the momentum is cooling off and the short squeeze is over. And now, it looks like it's due for some massive pullback. So I don't think going long is a great idea. It's a falling knife right now. If you do want to go long, I would hold off to 375 where the gap is. I think that's a pretty good entry. And if you want to go short, you already missed a lot of downside today, but still a lot of downside to go. I would support going short. And again, I would cover at 375 where the gap is. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is RDBX, Redbox Entertainment. Thanks everyone for watching today. I appreciate you guys. Please, like the video. Please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.